The Hindenburg report draws people's attention to the leverage, the debt to EBITDA ratios, so how much debt do they have relative to their earnings, and the current ratios, which is how much liquidity do they have, current assets to current liabilities. If it were come to that, and if some of these banks, financial institutes, under pressure from the public, under pressure from the opposition, were to start calling for the debt back, what's your reading of the financial statements of the Adani Group? How comfortably placed are they at this moment to be able to service their debt obligations?
Asset sales are not that easy, Rahul, and they cannot be done overnight. And I think at this point in time, for Gautam Adani to come out and put an asset on the block would be very, very tricky. It would send out the worst kind of signals to not just his investors, but to everyone who's watching the group very closely now. I don't think it's an option, frankly, to put an asset on the block. Not for a moment am I suggesting that it has come to that already and he needs to sell an asset down to become liquid. But I think liquidity will become an issue because the gates are shutting with the likes of Credit Suisse and Citigroup, and this will have some kind of a contagion effect in his ability to raise liquidity overseas. In the Indian banking system, I think with the kind of panic which is going around, it will be a brave banker who provides a line of liquidity to the Adani Group right now. So it's a tricky situation. Now, I don't want to be alarmist out here and say that it's come to a point where the group is headed for bankruptcy. No. But I will give you one example, Rahul. Back in the day, a few years or many years ago, something like this, and the situation is not exactly comparable, I hasten to add, with the Anil Ambani Group. At that point, a lot of questions were asked about Anil Ambani Group. But then it was offered that he was sitting on big assets. He had power assets, he has infrastructure assets, road assets, metro rail projects. He had a mutual fund company. And then it turned out, you know the story and how it ended, that none of them was actually in the shape that it was in, or it was preferred to the market. So I can see some small parallels between the situation, and I am sincerely hoping that this does not go the Anil Ambani way.
The Life Insurance Corporation of India is under fire for investing heavily in Adani Group shares. Now, the LIC statement says that they came in at much lower values. They've been able to make sufficient returns on their investments in LIC. However, given the sharp fall in the value of LIC shares, in the value of Adani counters, the gains that LIC had made are now on the verge of getting wiped off. Given the investment mandate of the Life Insurance Corporation relative to, say, a Canadian pension fund or any other international pension fund, does it seem awkward that LIC would be investing in stocks with such high promoter holdings, such limited public float? These are people's life earnings in pensions, and LIC went and invested them, and that's something that the opposition is looking to turn into a big deal.
I think it's a lot more than awkward, Rahul, but LIC has always had these kind of questionable investments, and I've been the sternest critic of LIC's investment strategies. It has been the go-to company for the government of India to bail out all kinds of companies. Whenever a company needs bailing out, whether it's an IDBI bank or somebody, the government just picks up the phone and LIC is out there seeing value in what nobody else sees value in. And it's just an indefensible position. And I think at some point there is a price to pay for it. And it is no coincidence that LIC stock has been such a big underperformer since the IPO happened, and investors have lost such a lot of money out there. Now, do you want to join the dots and say, where did the instruction to LIC come from, if it was such the case, to get into the Adani counter? Because this is a very murky area that we are going into. And this is the kind of tone that opposition parties would be singing today, because they would be singing the crony capitalism tune. And whether there was a white knight with instructions from New Delhi who was doing some kind of a bailout for the Adani, who's considered to be friendly to some people in power, I don't want to get into that. But because this is the realm of insinuation and stuff which cannot be proven. But I think it's free for all at this point in time. The one thing that one can say with some certainty is that LIC has been known and has a track record for very, very imprudent investments, and this will probably go down as one more in those line of investments.
Now, what's your advice to retail investors at this moment? Because there are two divergent points of view. One set of investors feel that they missed out on the hockey stick-like jump in Adani counters. those prices are now at far more reasonable price earning multiple ratios, and therefore this may be a good time to enter, especially some of the more robust businesses. The other is that, hey, we don't fully understand the gravity of what's going on. No one seems to be able to predict where the bottom is, and therefore don't jump in and try and invest when you don't know how far the stocks are going to fall. So how are you seeing that? If investors are looking to you for a broad suggestion what to do, what would be your take to them?
Rahul, it's a falling knife at this point in time. It's very difficult to advise going out and catching a falling knife because you just don't know where the dust will settle with this one. If I were being honest with you, I would have said that this last 30-35% of the fall of the last couple of days, I frankly didn't see it coming. I thought that a lot of the damage was done in the first 2 or 3 days, and maybe nerves would begin to settle. But I think there is more smoke, more fire behind this smoke, and which is why this issue is refusing to die down, and therefore it would be very, very improper of me to go out and advise people to go out and buy stocks. But having said that, I would suggest one thing, that you look at Adani Group companies as not one homogeneous entity. I'll give you an example. You can look at Adani Enterprises, which is facing the biggest amount of rout. It's in the Nifty, and it's going down at the average of 20% a day. Now, that probably will bear the biggest brunt in case there is a liquidity issue with the Adani Group. There is none today, to be sure, but if there were to be, then I think Adani Enterprises is the one that is clearly, as you can see in the stock prices, falling the hardest. But they also own Ambuja, and Ambuja till a few months ago had nothing to do with Adani. Ambuja is a world-class cement asset which is falling because the ownership lies with Adani right now. It has strong cash flows, doesn't have any great debt on its book which it cannot service from its cash flows, and it is falling because of the sentimental linkage with the Adani Group. So if you want to cherry pick assets because they have fallen in the last few days, then consider the ones which are falling only because of an umbilical cord of sentiment with the Adani Group, but not because a drying up of Adani Group liquidity actually affects their operations in a single way. This is again no recommendation to go out and buy Ambuja at all, far from it. But I think that probably makes more sense, or even an Adani Ports, than to look at something like an Adani Enterprises at this point in time. But again, no recommendation at all.